Hey, what's up, everybody? It's Hunter and Sam with The Educated Consumer. Happy 2025. Hope everybody had a great holiday and gearing up for a big new year. Wanting to come with you with some new content this year, really just kind of keeping you update on market trends, right? So we wanted to start off fresh with like, hey, where do we feel like interest rates are going over the next year, right? Are we going to get better? Are we going to get worse? It's going to stay the same. Sam's got some knowledge we're going to drop on you.
All right, let's take a look at this chart. So this is from U.S. News, and this is the predictions from Fannie Mae, MBA, the Mortgage Bankers Association, and Wells Fargo, their mortgage rate forecasts heading into 2025 and 2026. As we can see now, they have us pegged at 6.63. That prediction's already a bit off. So we're around 7 now. It's pretty far off.
It's a smidge off, right?
So with that being said, from our perspective as mortgage lenders, what we do, just being honest, is we take these predictions and then we add about 0.25%. And that will get you closer to accurate mortgage rates.
Yep.
Based on where the predictions have been for like the past 3 years.
Predictions like going to Vegas, right?
Yeah, exactly. Exactly. It's all a gamble. These are the smartest people in our industry.
And they're missing.
And they get it wrong nearly every time. But with that being said, we can at least see the general trend of where we see things going. And when we're taking a look and kind of breaking it down and just kind of going in the middle of these three predictions, we're going to see by the end of 2025, we're going to be hovering around that 6 to 6.5% range, maybe a touch higher. I mean, of course, at the end of the day, nobody really knows, but I would predict something around 6.25 to 6.5%. And we'll see that gradually kind of fall closer to 6 in 2026.
Keyword is gradual, right? I mean, I think when we look at where we've been over the past couple of years to now, right? We've been bouncing around this level for how many years now, Sam? Like, is this, we're going on our second year. What,
2.5, 3 years, yeah.
March will be, almost 3 years to where once we got to that 6 level, we've kind of played somewhere between 6 and 7.5 for the past couple of years. And if you look at the trends for this year, pretty similar, right? So what's that telling us, right? We all had hope in rates coming down. They're not coming down, but neither are home prices.
Right. And what it's telling us in the broader economic sense is that people aren't predicting a recession this year.
Yeah.
Not to take it too political, but essentially the markets are betting that the economy is going to remain strong.
That
so
Trump will be good for the economy, right?
Which means, so they don't have a reason to drop rates.
Well, I mean, Sam, what you think about it, right? Before Trump took office, or before Trump was elected, the predictions were rates were going to kind of mid-5s. And literally within 30 days of his election, all these people that were saying Fannie, MBA, Wells Fargo adjusted those predictions to not go as low as we thought they were going to, right? To really kind of play around, and where we're hopeful is we balance out kind of mid-6s.
Right. And so if you're a prospective home buyer thinking about buying, don't let interest rate be a major factor in not purchasing, in the sense of don't be waiting for rates to come down, because you're going to be waiting a heck of a long time.
Yep, you got it.
If if affordability is just an issue and you're not going to be comfortable, with monthly payments that you're given, I understand that. But don't be sitting on the sideline because of interest rate. And one of the main reasons I say that is because in order for interest rates to come back down to 4%, unemployment's going to have to go up.
Yeah.
Right. Or
the economy's going to have to get really, really bad. We're going to have to be at war. There's going to be something is we're going to have to get a whole lot worse from an economic standpoint for us to see something that low. Do we really want to get there?
Right. And do you want to be buying a house in that market? I mean, personally, no. I would say no.
I mean, what we're experiencing is the economy trying to stabilize, right? It's easy for us to think that coming into 2010 through really 2020, rates were artificially kept low. We should have never been in the 4s, right? We're normalizing the interest rates again. This is where rates should have been for a long time. Coming out of the big shakeup in '08, they held rates low for so long. We're stabilizing, and it's hard. Home prices have held strong. Interest rates are holding high, so payments are high. But at the end of the day, it's an investment avenue, right? Building wealth through real estate. So regardless of the rate 6, 7, or 8, when we look at home prices, what they've done since rates have gone up from really what, March of 23 to now, we're not losing gain in our markets. We're appreciating. So that means if you go park your money into real estate, yes, the payments are high. So is rent, right? But you go park that money into real estate, you're still going to reap the benefit of paying down the asset when you make your monthly payment. But also, what was the annual appreciation around our market? 5 or 6%, roughly. That number hadn't been balanced out yet, but that's in a pretty normal market. So you're parking your money, and guess what? It's going to grow.
Yeah, I mean, like you've told me, it's just another investment, right? Do you
Correct.
invest
Yes.
in a retirement account? Do you invest in a brokerage account? Do you save money, in a savings account?
Mm-hmm.
Hopefully the answer is yes. If the answer is no, watch some more of our videos.
Yeah, leveraged investing. We'll talk more about it. We're going to do a video on leveraged investing, right? You're taking your own funds of 50 grand and buying a $400,000 asset and have control over it, appreciating at 400,000, not your initial investment of 50 grand, right? So real estate's still a sound investment, right? We're still growing. We're in a tough market where home prices are staying high, interest rates are staying high. That means payments are high. But guess what? People are still investing in real estate and getting down the road in the next couple of years and selling and having another 50, 60, 70 grand from their initial investment. It's still a sound investment, even in 2025 as rates hold higher longer.
If you're curious how the home buying situation looks for you, shoot us an email or shoot either of us a call or text, and we'll get some personalized numbers over to you and schedule a free consultation to really take a deeper dive into your situation and kind of prepare you for the idea of home buying this year. If it's a goal of yours, we'd love to help. We're licensed all over the country in all 50 states, and it would be an honor to be of service for you and help you out in the new year.
Yep. Awesome.
All right, we'll see you soon.